What's going on, everyone, and welcome to the Eternal Money Podcast. I'm your host, Freddie McKine, also known as A Flip. Along with me, I have Nick and Nelson. Introduce yourself, guys.
Yes, sir. We are here, man. We are here live. This is one of one, baby.
First episode.
Eternal Money Podcast, man. We live.
Let's go.
How are you guys feeling?
I'm feeling good, man. I'm feeling ready. I'm feeling ready to inspire and share some things. What do you think?
I'm feeling great, man. It's been a hot week in New York, but holidays are coming, 4th of July, so it should be a nice little break, you know.
Yes, sir. Yes, sir. What about you, Flip? How you feeling, man?
Man, I'm feeling great. This is the first episode, one of many to come, and it's such an honor just to be with you both, just so we can inspire everyone, educate, and just share our best practice and strategies. So I'm ready to get into this. What about you guys?
Let's go, man. Let's do it.
All right.
I'm ready.
Let's get it.
All right, everyone. So for each episode, we'll always start off with going over what the week ended like with our buy zone, our watch list, as well as a topic that we'll be discussing for each week. We want you to follow us on Instagram at Eternal Money Podcast, as well as our YouTube channel. Just search Eternal Money Podcast, as well as following us on Twitter at Eternal Money Pod. All right. So for this week, Friday, July 1st, the SPY actually dropped down to 2.25. QQQ went down 4.25. The DIA went down 1.32. And IWM went down 2.09%. Fellas, what are your take on this?
All right, now I guess I'll go first here, give this a shot. So, yeah, man, as we see, things are still going down. I think there's a mixture of things going on here, to be honest. I think that the fear, the people that are throwing some fear into the market, I think it's not helping for sure. And also, I just think that right now, there's no catalyst to bring this market up. And right now we're at a stage where, there's talk about a recession. There's talking about the Fed with the interest rates, how they're trying to tame inflation. And I think that mixed in with people just feeding into this fear nonsense, it's continuing to bring the market down and to entice people to get out. So I think that's what we're looking at. I think it's going to take time for this thing to cool down. We still have the war going on and all that stuff too. So until there is a sheer catalyst to give us some legs here and bring this market back up, I think it's going to be a little while until we subside this.
I agree with you there, man. Everybody's just sitting around. It feels like just waiting. They're waiting for something, some good news, something, is the war going to end? I don't know. But I don't know. The bear market, I know we're not at 20% down anymore after last week's rally. Remember that last week it was a crazy rally in the market.
That was a good rally. It was a good rally.
I think it was like a 3 standard deviation move. So that was insane. So after even this week, we're down 2.25%. So we're just down under 20% for the year. So we're hanging around that mark, that 20% mark. And I don't know. It's how I look at it sometimes. It's already been half a year down, and these hedge funds and all these people they gotta show some performance, man. So everybody's looking bad right now. So there's got to be a rally coming soon.
Even the pros are out here looking not so good, huh,
bro? It's not looking good, man. People are going to want to take their money out, after the first half.
That's what it is,
It's bad. It's bad.
It's wild, man. It is wild. I mean, I'm going to share a stat with you real quick. This was very interesting. It said the S&P 500 is off to the worst start since 1970. So that's 52 years, bro. 52 years. So, hey, if that's not a gift from God himself, I don't know what to tell you, honestly. We're at lows now that you're getting things at discounts that hasn't been. And, how people can be afraid at this point and not be salivating to buy more shares at discounted price. I don't know what to tell you, but that's what I'll be doing.
Yeah, man. Every year at this time, I always go around. I go look, and I'm like, okay, what's on sale this year? Like, almost everything's on sale. I remember last year, Apple, I think it was around flat or down a little bit at the halfway point. And I think after that, it had like a rip your face off rally the rest of the year. It was up like 30-40% the second half of the year. So I always look for stocks that are beaten down, but I don't even know where to look this year because it's everywhere, you know?
It's kind of just like pick your favorites at this point, right? Whatever you're in and you've been in for a while, just pick your favorites and buy them, you know? And if you look at it too, it's like we're trading at this zone. Like it's kind of just like we're trying to break out, then we come down. We try to break out, get some legs, we come back down. So we've been in this zone, man. Like probably around the time that the war started, we've been in this zone that not much is going on. You know, people are buying and selling, but it's not. There's nothing bringing us up. There's no movement. There's no momentum to the upside.
Yeah, I call that the chop zone. You know, everybody's just some buyers, some
like
sellers.
Whipsaw.
Yeah, exactly. It's a whipsaw. I mean, it's good for day traders. You know, if you have time to day trade, you could play those waves up and down. But regular investors, they just want, you know, they want a smooth ride up the wave, slow, nice and steady. You know, so. Yeah. I mean, it's been rough. Like I think I haven't seen something like this. But besides 2020, obviously, since
I was just about to say
since my first year back in 2018 in December. You remember? I don't know if you remember.
That was when I first started, bro. So I remember. Yeah. I remember. It wasn't good back then either.
Yeah. Like right before that, in February, I forget why. Something with the government. The market just tanked, and then that's when we started looking at the market.
Yeah, so right. I remember.
Everything was recovering, and then October hit. Everything went down. November came. There was a rally. Then everybody was like, "Oh, no, there's no way. There's always a Santa Claus rally in December." And no, Santa Claus did not come. I mean, it was red, but it wasn't Santa.
That's right. There was no Christmas trade that year. The Christmas trade was not on that year.
Yeah, man. So I don't know. Still looking around, man. You know.
Yeah, man, that's what you got to do. Just hang tight and, be ready to buy. Have a little extra money on the side and be ready to buy. That's what you got to do.
Good stuff. All right, for our next segment, we're going to jump into our buy zone. This is where Nick and Nelson will be going over their purchases that they made this week, go over their weekly buys again, the open trades, and their profit taking. Who wants to start first?
I'll take it. So I did trade every day this week, even though I had limited time. But I made some good trades and some bad trades. So I'll start off Monday. I was bearish, so I sold some calls, and I made a profit of $269. I sold the 3,900, 3,905 call spread and the SPX. The SPX closed at 3,911 cents, so I had to pay out 11 cents. But since I collected 280, then I made 269, so that was good. And then I had a preview on Tuesday of this week. I had another trade. I had a trade that closed, actually. It was a swing trade on the SPY. All that bullishness last week helped me out a lot, and I closed that one out for a 60% profit. So that was good.
Beautiful. It's beautiful.
And then that same afternoon, at the end of the day, I also made a couple trades. So I tried to play for a bounce because the market was down all day, and I bought a call, paid $95 for it. The bounce never happened, but at the end of the day, I sold some options for $140, and that worked out in my favor. So I made a net of $106 that day.
Nice.
Wednesday came. I tried to get a bearish move, so I bought some puts for $90, but the market was just choppy that day, so that was a fail. And then I was able to salvage the day again at the end of the day. I've been getting lucky this week with another iron condor I sold for $200, and that worked out. So I made a net of $110. That was Wednesday. Thursday was a bad day. So Monday through Wednesday, I was green. Thursday, I tried to do the opposite. So my direction was off every day pretty much this week on my directional plays. I couldn't pick the right side, but let me see. What did I do Thursday of this week? I tried to get bullish. That was the end of the quarter. I said, you know what? Let me see if the rebalance pushes up the market a little bit, you know? And obviously it didn't, because the market just chopped around, actually. So I lost 90 on that play. And then I tried to catch literally a last minute. I placed a trade at 359.
Wow.
Holy cow. Right before the market closed. So I collected 350, and there was a pump in the market, like an 8-point pump, the last minute, bro. Like insane. So that ended up costing me 150. So I lost 240 on that day.
Oh man.
That sucked. And then Friday of this week, I did something that I don't usually do. Thursday afternoon, I bought.
I thought you were gonna say buy Doge, like the flip.
I was like, don't blow it. Don't buy Doge.
Hey, listen, I still buy Doge here and there, you know, but nothing crazy, man. Like,
oh, you blew it.
You know, hey, listen, I'm not putting my life savings on it, but hey, if Elon pumps it one day, I'll be there for it, you know. But
if he does, I'll be a millionaire. You feel me?
Flip will be like, forget about this podcast. I don't care about this no more.
I'm about to go to DR with my profit.
I don't need you peasants, man. I'm out of here.
Yeah, get out of here. What do I need this nonsense for? Get out of here.
So Thursday afternoon, I try to make a play thinking that Friday there would be a big move after the rebalance, and that didn't happen. Actually, overnight, the futures, they were down about 30, 40 points. So the trade was looking good, but then by the time the market opened, I think it was only down like 8, 10 points. So I lost all.
Oh man!
I think I paid 180 for that. That was a fail. And then in the afternoon, again, I tried to catch a play, and I tried to make a bullish play. If the SPX broke 38.11, and once it broke 38.11, I bought a call, the 38.30s, because it's been a key level before. I feel like the SPX, that 38.11, the buyers and sellers, they just fight. They just fight right there, right?
Going crazy,
so I said, if it gets over 38.11, I'm going for the bulls. I'm going with the bulls. You know, I'm going up. So I did. I bought 38.30s, and it started out bad right away. It went down, but it was a small play. It was $220, so it went all the way down. I think it was down to the value of the option was down to like $30-$40. I was like, what's the point of selling it now? Wait, what's the point of taking the trade off now? I already lost most of my money. So I held. And then the bulls did show up. The bulls showed up at about 3:30 in the afternoon on Friday, and they pushed it up. And I was like, if this thing hits 38.30, which was the option, I'm gonna sell right there. Of course, it just missed it. It hit 38.29.82, bro. Oh, so I'm like, all right. All right. They're gonna retest it. Nope. It just chopped around the last few minutes, and then I lost it all.
Typical of this market.
So I lost 410 on Friday, and then for the week, it started off promising, ended up red. I lost 165 this week. I live to fight another week, man. So
hey, man, that's how you got to be.
It is what it is.
Game, man.
Hey, listen, you don't win every day, man. If they tell you, if traders tell you they win every day, it's bullshit. So
that's being a trader,
you know
right?
What I'm saying?
Traders lose, man. That's how it goes. So, that's part of being a trader.
And what we're gonna do here, we're gonna be transparent. You know what I'm saying? So.
Hey, listen, I got a lot of things to be transparent about in that trading account for. Let me tell you something right now.
So, yeah, I mean, I was down 165. The market was down 2.25, so I beat the market. But
yeah, right?
It is what it is, man. So
hey, in this market, man, I wouldn't be so happy with that. You know, these little moves like that.
That's true.
But hey,
that's true. But you got to take, whatever positive.
You got to take it, man.
Whatever positive you get, you got to take it. So
whatever bragging rights you can get in this market, you got to take it.
Bro, listen, everybody says everybody. What I've always been hearing since the past 4 or 5 years or whatever is, nobody could beat the market consistently.
That's exactly.
You know what I'm saying?
Exactly. That's what I always hear. That's the narrative.
So right now, the market's down 20%, and I'm not. So I'm winning right now. You know what I'm saying?
You go ahead, man. You go ahead. You go ahead, man. But bro, I love that you share these numbers, and because it gives people a chance to see, especially with the three of us. We all have different styles. We all have different approaches, and for you to share those numbers, and obviously your game is a little bit more riskier, right? And you take on the risk, and you're able to manage that risk. So I think that's a testament to how you see the markets. I think it shows the kind of courage you have as a trader, and just for you to be that involved in your craft and be able to speak on it in those lenses. Obviously, you know what you're doing. So I think that is a great value to people listening to this, for them to understand that, yes, there's a risk there, but you also got to be able to manage that risk and know what you can take on and what you can't, right?
Absolutely.
Definitely. Yeah. I mean, the key to this thing is when you're trading options like I do, man, you can't try to be a millionaire in one night. You can't trade too big because you're just going to blow your account. You gotta try to take your hits, your singles, your doubles,
That's it.
The week started off good, not so high. What's funny, man? In 2020, when we had that crash, that was my best year trading. Like that 3-month period right there where Corona was around and we were home, man. I was killing it in the market. And I was home. I didn't have to be at my 9 to 5 or whatever.
Yeah.
I was able to.
You were probably going through like daily lessons too. Like you were learning, right?
I was able to focus so much on it. Like I still try to trade now, obviously, because it's just part of me, man. I love trading, but it's not the same when you can't just put all your focus into it.
Damn, man, why can't we just be full-time millionaires?
Yeah. You know what I'm saying?
And, you know what I mean? Yeah. Get the flip out here,
So soon.
But yeah, risk management with options or with any investment, man. That's number one, man. You have to manage your capital and control your risk, because if not, they're gonna eat you alive, man.
Exactly. And I think especially for trading, like we both trade, and I think also you gotta know what your plan is with that trade when you get into that trade, right? Wouldn't you say?
Of course.
Like you can't just take a trade and say, all right, well, I guess, if it goes up, I'll just keep letting it go up. You got to have a design of what are you going to do with this trade? Where's your exit? What's your target? You got to stop loss. What's going to go on? And as far as you're planning for that trade.
That's exactly what happened to me today, man. I had that target and I just missed that target, I mean, you could say I was greedy though, because I saw the value of that option go all the way down, or not today, Friday. I don't know what I'm talking about. But I saw the value of that option go all the way down from what was it, 220 to like $30-$40, right? So I'm like, all right.
Yeah.
Then it came back all the way. It went from being down at $30 to, and then it was worth like over $400. So
man,
I was like, I should have just got out, because I'm like, all right, I made all my money back plus then some, But I was like, no, I'm here for 38.30. I'm here for 38.30. That was the stubbornness in me. I should have been prudent probably and just been like, all right, I made my money back and then some. It's the last day of the week, on that trade. Let me get out now. But hey, greed is in everybody, man.
Hey, fear and greed, Mookie's model.
That's it. So
that's how it goes.
You win some, you lose some, like I said. So
hey, that's it. It
is what it is, man. What you got, bro? What you do all week?
All right, now on to the boring stuff. The boring, the slow stuff. All right, here we go. All right, so I have no open swing trades right now. Nothing. I've really had a hard time with my trading account this year. I'm going to be 100% transparent with you. I've learned along the way. I've only been trading stocks. I've been investing for 4 years, but I've been actively trading the markets for 2 years.
Okay.
So, I've learned lessons. I've gone through ups and downs. And this past one, I'm sure the growth sell-off. The growth sell-off has been brutal, man. It's been absolutely brutal. We're looking at positions that are down 70, 80, 90% from the all-time highs. So my trading account is down significantly, bro. We're talking like 50, 60% down. So, and it's because I made the mistake early on. I didn't put any stop losses on my trade. I figured I had good companies. I didn't put any stops because I wanted to see what it was going to be. And, I got caught with no stop losses. So, I learned from that mistake. I'm down now, but I know next time to be a better trader and, put my stop losses in all my positions. If it's a swing trade, if it's a position trade or something that I'm, trading to fair value, then okay, you can write it down to write it back up. But pure swing trades, I've learned a lesson to implement stops. So, to work more of on the professional side, All right, bro. So here we go. Let's go into some buys here. Let's go to some some dividends, baby. All right. So we bought some companies this week. The first one we bought on 6/29 was Dow, not the index, but the company Dow. They're a materials company, and I bought them. So I got 3.84 shares of them. I put $200 into it. I was able to get them at 52.02, which is a 5.5% dividend yield, and that added $10.64 to my forward annual income. So that was number one. Number two, Cisco. That's also in my my taxable account. That's a tech company, tech and security company in networking. I got 4.6 shares of that at $200, same thing. And I was able to get them at $43.08, which I feel is severely undervalued. And that turned out to be a 3.55 dividend yield, and that added $7.01 to my income. And then the last one on 629 was Altria, ticker symbol MO. And that was 4.76 shares of that, $200 into that. And I got that at $41.94. And that gave me an 8.57% yield on my dividend, increasing my income to $17.14. So the reason why I bought Altria was because they just came out with some bad news about the brand Juul, which is an e-cigarette company, and they happen to own 30% of the company. So the FDA just came out with a ban that everyone has to pull those from the shelves. So the stock dropped like 8 or 9% in one day. So I was probably a little early, but this is a long-term buy and hold for me. So I saw the value there. I saw that it was trading at a discount, and $41 for me for Altria is a no-brainer. So I got in there. I scooped some shares up, and the last one that I added to was in my Roth IRA, and it was the S&P 500 index fund through Vanguard, and I got 0.9 shares of that, $250, and I was able to get that at $352.40. So small dividend yield on that one. It's 1.5% on that, just adding a few dollars to my income, $3.87. But overall, our totals for this week was I invested $855. I was able to get a 4.74 dividend yield on my money, and I increased my forward income for the year by $38.66. So overall, I was happy with that. I got some good companies.
Love it.
I got some good discounts. I felt I was getting some good deals, and I was able to increase my income by almost $40. So that's a win for me all day. A lot of times I get the questions of why am I investing in just 2 or 3 stocks? And honestly, the transparent answer would be that on a daily, I'm managing almost 65 positions. I think it's like 63 positions with my Roth and my taxable. So, there's only so much money to go around, and I can't add to everything. So I try to go through my list. I look at my chart, and I rely on my skills that I can look at the chart and decide what's undervalued and what's setting up the way that I look for it to set up. And that's how I determine what I'm going to buy. So
I love that strategy, man.
Yeah, man, that's my reasoning behind it. I know it's not very thrilling. When I'm not swing trading, it's not very thrilling. Like Nelson's, he's in action every day. I'm kind of on the boring side, but I'm building my wealth as I go. So what I'll do for this section, as I'm broadcasting my dividends, I'm also going to share with you guys the monthly what I got per month as far as how much dividend income came in. So I'll start now. So for the month of June, I was able to capture $1,277 of dividend income. So that was reinvested back into more shares into the portfolio. So overall, we're very happy with that. So those are my buys for this week, partner.
Love it.
Yeah, I like that Altria pickup, man. They're really beating up. I actually, this is not investment advice, but I did recommend that to somebody I know. And
we're doing that disclaimer at the end too. You already know.
Yeah, exactly. I did recommend that to them because I saw the yield. The yield, like right now, it's like what 7-8%, I think, or something.
Bro, I got what I say.
I think it's like 90. Do they pay 90 cents a quarter or something?
Yeah, bro, I got an 8.5% yield on that money.
Yeah, so I was like, look, this company, it could be an overreaction. You know what I'm saying? And they make plenty of money. It's a, what is it? A cigarette company, right, or something?
It's a tobacco company.
Yeah. So that's not going anywhere, man. Like I know the laws, they try to go against them, but that's not going
Come on, bro.
anywhere.
Come on,
man.
bro.
They've been trying to go at big tobacco for how long, man? Like,
Exactly.
that's not.
Exactly.
So I was like, yo, this is a good play. It's somebody they're also trying to build their dividends up, and I say, look, this company, it was like about double the price before, you know.
Yeah,
So
yeah.
I think right now you're getting it at a good price, and go for it. You know, it is what it is.
Yeah. And you could even put calls on that too.
Yeah.
If you really want to put a little juice on that trade, you could put some calls on that trade and use that as a swing trade as well.
On your swing trades, you were saying that you didn't put stop losses. Was that you were buying stock or stock shares or
yeah, man?
Or doing
I was
options?
doing shares.
Okay.
I wasn't doing options. I did early on. I did some options on DraftKings, but overall it was just purely swing trading, bro.
Yeah.
Just buying the shares, setting a target. Typically, you would set a stop loss, which I did not. But just swing trading shares.
Okay. Yeah, man, it's been tough. It's been tough to swing anything, you know, in the bull direction, you know.
Bro, hard unless you're shorting. I mean, but shorting is a whole different.
No,
game,
that's
you
the
know
thing.
what I mean?
But I would not short with stock. You know that you could really lose your shirt with that. You know what I'm saying?
I know you can't. I mean, unless if you're shorting the indexes, maybe a little less risk. You know, you can kind of manage that risk a little bit better. But if you're shorting like a penny stock or something like that, you're in big trouble, man.
Yeah, it's like that's what happened last year. Remember with AMC and GameStop?
Yes, sir.
Everybody was shorting on them, and look, GameStop is still in the 100s. And I think it started it was like $10, $12. Like,
I know.
So all those big hedge funds, they lost their shirt on that, man.
Exactly.
That's
bro.
why
exactly. That's what happens.
When I short, I stick to options because I know how much I'm going to lose. Like I don't.
Yeah.
That's why I don't really use stop losses when I buy options because like it's predetermined. If I pay this much, if I pay this much, this is it. I can't lose any more than this, and that's it. You know. But
exactly, stops are typically for day trading and swing trading, or position trading.
Right.
You're trying to ride a stock to true value.
And also, you need a lot of money to really make
to
make money swinging stocks. You need a big
you do, bro.
big account, you know. So that
put it like this: typically, a swing for me at full position after the breakout, full position is probably maybe $4,000.
Yeah.
So think about where I'm at right now, bro. If I'm taking $4,000 trades and I'm under because of no stop losses, you know. But hey, good companies, we're going to ride them back up.
That's it, man. Hey, the good ones, they come back, you know.
Yeah, that's it, man. That's it. All right, Flip, what do you got? Come on, man. Let's go.
All right. So for our next segment, watch list. Fellas, what's in store for you both for next week? What is your strategy? What are your plans?
Do you want me to take this one first? Because I was just talking about the dividends. I could just kind of piggyback.
Yes, sir.
Mm-hmm. All right, so just a few that I'm eyeing. Ticker symbol PNNT. This is a business development company. Patton and Park. Love this company. I've been investing in them for a while. If you don't know what a business development company is, Google it. You should definitely have that in your portfolio if you're a dividend investor. You should be diverse, and I try to be well diverse as far as dividends. But this company is setting up beautifully. I just got a dividend from them today. I think it was $72. It bought me like 11 or 12 more shares, which is beautiful. So that's what I did, and I'm looking at them for next week. So I'm again, just like Nell. You see the similarities. We have similar, different strategies with very similar views. So what am I going to do? I'm going to look at the chart. The chart is going to tell me when it's set up for it to be bought, right? So that's one I'm looking at. I'm looking at Caterpillar. I was going to tell you about that too for a call. Caterpillar is setting up beautifully. It's gotten hugely beat up the past I want to say 2 weeks. So it's come down to a level where it's setting up. It's going sideways, and that's what we call stage one, and that's what I typically buy. So, I'm looking at Caterpillar. I'm looking at PNNT. And there's one more. Oh, Target. I'm looking at Target. I might start a new position at Target that sets up. And that, as you know, retail has been annihilated. That, Walmart, all those brands have been just pushed to the floor. So I'm potentially looking to start a position in Target for the flip. Baby.
Target. You know I'm bougie. That's it.
You know what I'm saying?
Yeah.
So, yeah, man.
the consumer discretionary site there, if it was getting killed this week, man.
Yeah, man, destroyed. So those are the three that I'm looking at for next week as far as, deploying some money.
Sounds good, man. Sounds good. For me, I'm only going to give a couple ideas here. One bearish, one bullish. On the bearish one, it's going to be a Chinese company, JD. It's been chopping back and forth. It's been in a chop zone, like on the chart. So it's tried 3 times to get over the 200 simple moving average, and it's failed. If it goes back up there again, I will short it. If it tries and it doesn't close over, I'm going to short that one. And on the bullish side, I'm going to look at Microsoft. Microsoft, it closed over the 20 EMA on Friday. If it holds Monday, Tuesday, then I'm going to go bullish on that one. Probably
Microsoft broke out. I didn't see it. It broke out.
It closed over the 20 on Friday. So
yeah.
It's been doing good. You know, even though the tech sector was choppy this week, but Microsoft wasn't. Microsoft was actually, it was like an outlier. So
yeah,
I always look for those outliers, you know. So and they've been down this year too. So, and they're a good company. So it has everything that could be one of those, you know, like it could do very well the second half of the year.
That's right.
You know what I'm saying? Right. So
nice comeback kid story right there.
That's what I'm looking for, just for single companies. And then the market, I don't know, it just can't get over the hump, man.
It can't, man. We're still in that zone. We've just been chopping back into that zone, man.
I think there's more downside coming, man, for the S&P. Unfortunately, I'm just not seeing it with the things I look at. Implied volatility, the skew. I don't know if you guys follow that, but like the skew is basically the price of the out of the money puts, the options. They're it's just not. It's like the lowest it's been since 2020, man. So that's not good. You know what that means? That people, they're just being complainsive right now. They're not buying protection. They're not protecting their portfolio. They're just sitting around and waiting. And when that happens, that's very dangerous, because if the market starts going down, everybody's going to want to buy protection. You know, you buy protection. What's that mean? It's going to go down more. So
what are you protecting? The next leg down, baby.
That's it. If everybody's thinking it's going to go down, it's going to go down. You know, so
it's going to go down.
Unfortunately, I still don't see the market breaking out anytime soon, man. But we'll see what happens.
Yo, Flip, Rome wasn't built in a day, man. Come on.
You know what I'm saying?
Patience is a patience game, man.
What do they say? They say that the market takes from the impatient and gives to the patient, baby. So give me all the money. Give me all the money, Flip.
Listen, man, I'm just trying to get rich or die trying. I'm trying to follow you guys. All right.
Yeah, out here, baby.
So for our next segment, I very excited to hear your thoughts on our topic train. So for this week's topic train, which is our topic talk discussion, we are going to talk about, it's hitting me right in the soul, in my heart, debt, gentlemen.
Oh, debt.
Oh, man. Oh, Lord.
We need that sound effect.
The Flip knows about debt.
All right, so Flip, why don't you start us off then, baby? Why don't you tell us what are your views on debt, and then me and Nelly F. Legend get into it.
You know, I got to keep it honest with our people, right? Flip is in debt right now during this pandemic. Besides,
Flip is in debt right now. Please talk about it.
It's hurting me just talking about it.
We're transparent out here.
Credit card debt, man. Being, in this pandemic, I started off.
We're like in a confessional right now.
I know. I'm here like,
tell me your sins, man.
I feel like I'm talking to my therapist, right? So I was one of those consumers making you guys rich, making a lot of purchases in tech with different tech devices with Apple, Microsoft. Lord, if you only know how many tablets I have, how many laptops, don't ask why. But it's for a good purpose, though. It's for starting up my companies. So that's why I made these purchases. But I think my biggest debt right now is actually after purchasing my first home. I'm a first-time homeowner. I just started putting a lot of money in by buying supplies through Lowe's and Home Depot just to build it up. So I guess would you gentlemen say I'm in debt for good reasons? Putting with my investment.
I'm going to talk about that a little bit.
Okay.
I'll save it for that. But
the last piece is just being in debt right now is actually preventing me from making my purchases. So I'm hoping, and all these interest rates going up, I'm about to go in for the kill. Just pay it all in full. I can't disclose how much. I don't know who's listening.
Yeah, you know, IRS.
I think IRS. I'm not even worried about. It's the wife. She probably hear me right now.
She works for the IRS.
She works for the IRS. You know what I'm saying?
Man. She's gonna be listening to this episode as soon as it drops, man. She's gonna be like,
I'm just joking.
Yeah, episode 2, the flip will not be.
It's just me and Nell, bro.
It's gonna be Nick and Nell.
hey, but I was just saying that for the fans. It's not true. It's not true.
Yeah, I'm doing it for entertainment.
For entertainment purposes only, man.
Disclaimer: this is for entertainment purposes only. But I would encourage everyone right now who has a lot of credit card debt and debt, just pay it off, going to kill. Luckily I have the liquid and the money just to pay it all in full. I was just getting too happy just with my spending, so I don't want to keep paying interest off. So I'm just gonna go in for the kill, pay that off, and that way I can get back into reinvesting my money for my paycheck. And then once a couple of my business start getting more profitable, I'll go more into my strategy of what I'm doing with that. And just putting it back into my stocks, and with the hopes of buying my first rental. So that's for future episodes. I'll tell you what that journey will look like for each week. But that is my suggestion. That is my something I want to encourage everyone: just pay the debt off. Look at what you're making each month. Budget. Learn from the flip mistakes. Can I get it one time? Learn from the flip mistakes. Budget.
Yeah.
Instill that, internalize it, be realistic with your money. That is your roadblock from, reaching, financial freedom and building generational wealth. So just budget and be strategic. That being said, Nick, what are your thoughts, man?
All right. So, bro, you said some really nice things and really good things to touch on there, and definitely some points that people can see some kind of value.
Learn from the flip.
You know what I'm saying? Sign it off, baby. Sign it off. Send it out there. All right. So I think debt, such a great topic, right? You say so much about debt. So I think debt is, just like you said, I think it's a handcuff. It's a handcuff that you are, you're giving up the freedom that you're due to yourself, right? Because you have debt. So I think debt is something, a few things that I can say about debt. Number one is debt needs to be identifiable. Right? You need to know how much debt do you have. So number one is you got to identify how much you have and where you are. And number two, you got to be able to manage it. Right? I think those are the two things that where people go extremely wrong. Is they don't know how much debt they have and they have no idea how to manage this thing. So it's kind of just like, all right, let's pay the minimum payment and just keep rolling this thing through, and I think you get to the point where you're scrambling, right? So. I'm going to relate it to real estate because I always like speaking about real estate, and I think it makes more sense for this example, right? So let's talk a little bit about real estate as far as debt, right? So let's say you're somebody that is very excited to go get their first house, like you, Flip, right?
Yep.
You're excited about this. You saved up a little money, and now you're trying to go see what kind of loan you can qualify for. So this goes back to knowing how much debt you have and where you are, right? So when you're trying to get qualified for a loan, lenders and banks, they're going to look at what's called the DTI, the debt to income ratio, right? So this is basically saying how much of the percentage of your pay, of your income, how much money that you're making, how much of that is dedicated to debt. Now, typically, banks like to see 35 to 36%. That's where they kind of have their sweet spot, right? So anything over that, they're going to be less likely to lend you money. And they're going to look at you as more of a risk. And there's a good chance that you're not going to be able to get that loan. So if you walk in there and you have no idea what your debt is, and it comes back, you're at 51, 52% of your income to debt, they're not going to lend you on that house. So I think, like I said, debt is something that is a handcuff, and it is you're relinquishing your freedom to be able to invest and to grow your wealth because of this debt that's handcuffing you down.
Learn from the flip.
You know what I'm saying? So I think that's as far as debt is something that you have to tackle. If you're in debt, there should be no investing in your life if you're in debt. A lot of people ask me that. They say, because I talk to anybody about investing. Whoever wants to listen, whoever wants to talk investing, I'm your guy. I can talk and talk and talk and talk. So people tend to ask me, I have student loans, or I have this, I have 3 car payments, and I have a credit card debt, and I'm only able to throw in $20 into my into my Roth IRA or whatever account it is, right? Or I can only save $20, $30. Listen, if you're in debt, there should be no such thing as investing. Get all the debt gone, tackle it, be done with it, and then you can transition into being an investor. But being an investor and being a person that's in debt, it doesn't go together.
Say that one more time, please.
You know what I'm saying? It's like you're kind of it's hustling backwards, in my opinion.
Yep.
You're still in debt. You're paying interest, but you're also investing on the side. It doesn't make any sense. So that would be my absolute advice as far as someone looking at debt. Eliminate it, get rid of it, work yourself from the highest yielding to the lowest yielding, get rid of it all, and then transition into being an investor and being disciplined with your money.
So, let me ask you this, right?
Yes, sir.
Once someone pays off their debt, they're trying to get in the mix. There might be mixed feelings like, well, for me, paying off all my debt, just sticking within my budget and my lifestyle, right? It's a different topic. How much money should I put in? How much money should I invest per paycheck, right? Matter of fact, do I even want to put some money to the side so I can invest? Because you know what? I didn't get to go out for this summer. How much do you think, and what would you encourage people, what percentage would you encourage them to invest?
Good question, Flip. Flip's out here being the host. So I think, there's got to be some kind of balance, and I struggle with this at times. I'm going to be 100% honest with you. Sometimes I struggle with investing too much of my income, right? I'm kind of a supporter of the whole delayed gratification movement where, okay, maybe I'm not living the most lavish lifestyle now, but I'm delaying my gratification for later in life where my life would be more abundant because I have the funds and things like that. So I think you got to kind of try to incorporate a balance. You can't be, eating rice and beans every day. Nothing wrong with that, but you can't be belittling. You can't be belittling your lifestyle in order to, save as much money as you can. And also, you can't just say, "All right, I'm going to put in 5% or 10% of my pay and expect to be financially free." It's not going to happen. So, a good balance, incorporating it into your lifestyle, is probably the best advice I would give to somebody. And also, one more point real quick. A lot of people ask me as far as, like buying a rental property or starting a business or something like that, or something that you go into debt for. I think there is a difference between debt. You're taking on debt, something's going to pay you, and I think you're taking on debt is something that's not going to pay you. Like, just my opinion, a car note is a depreciating liability, right? It's going down in value. So it's not paying you any money. But if you take out a mortgage on a rental property and you're getting a drip of cash flow every month and that house is going up in value and you get to have tax write-offs and tax incentives, I think that is the better idea of debt, in my opinion. So that's what I would say, man.
Ooh, thank you for that.
Man, debt.
What about you now?
I've been like talking about debt so much the past few months. I decided back middle of April, right around your birthday, unit. I was like, you know what? Why am I even using credit cards, man? Like, I pay it off every month. I don't pay any interest, but I'm like, why? It doesn't make any sense just to use the credit card when I have the money. You know what I'm saying? So
unless you're getting the points, just get those points.
You know what? But then I was doing the math and I was like, it doesn't even make sense for the points, because they cap you off at a certain amount, and I feel like you spend more money too to trying to get the points. Like I've been trying I've been trying to get my wife off of the credit cards. I'm like, come on, we don't need it. We make money. We make good income. You know what I'm saying? She's a teacher. I'm a union guy. So it's like, we don't need credit cards. What's the point? And then I see, what hurts me too? I see so many people I know, they're drowning in credit card debt. I'm not even talking about you, Flip. I'm talking about other people. It's like, I'm like, oh man, like, all right.
I wasn't talking about you either, Flip.
I'm getting,
you know what I'm saying?
It's like, all right, I'm getting 2-3% whatever on the purchase, right? But then that person, they're paying like 16, 17, 18, 20%. So it's like they're paying me. Like, that's how I feel. Like, somebody I know that's struggling, they're they're paying the bank, right? All that interest. And then the bank is giving me 2-3% on my purchase. I'm like, so it's like indirectly they're paying me. So it makes me feel bad. You know what I'm saying? Like, so
I hear that.
I agree with you, Flip, and you know, like, until you have all your eggs straight, like, you should not be investing at all. You gotta pay off everything you owe. And yeah, man, like, and then another thing that kills me is these student loans, man. Oh my God.
It's a scam.
Oh
baby.
my God, what a scam that is,
It
man.
It really is, man. It really is a scam.
I'm like, I was talking about it all week at work. I'm like, it makes no sense, right? Like, Flip, you both just bought properties recently, right? Mm-hmm. I'm sure you had to go through so many hoops and rings to get approved for these loans and stuff.
Of course, man.
You know,
and
it was not a fast process at all.
Yeah, and then but like,
and mind you, we're W-2 employees too. We got W-2.
Exactly.
That's what I'm saying. And then, but 18-year-old kid coming fresh out of high school with no job, no history, nothing. They approve them for any loan. Like, it makes no sense, right?
It's true, bro.
The government or whoever, because I guess the government owns the loans now. It's like they're just setting the people up for failure and to be a rat the rest of their life.
Absolutely.
Spinning in that wheel, man. It's like,
absolutely,
it kills me, man. It kills me. And then I hear people saying like, "Oh, my kids are gonna get student loans," and I'm like, "Come on, man. If you can make that possible, please do not let them get a student loan." I know, like, people like that graduated 10 years ago, 15 years ago, they're still paying their student loans. I'm like, oh, come on, man.
It's true, bro.
You're screwed for life, man.
It's true.
Like, imagine this. You're in high school, right? You're told, go to college, right? I'm first generation. My parents' goal was to make sure that I attended college, right? Thankfully, that was all paid for. That was their dream. In my opinion, they blew it. They should have invested it. You know what I'm saying? But, going back to what I was saying earlier, imagine being a high school student, taking out this loan, going to college. You don't even know what you're going to study. You don't even know what the job market's going to look like after you graduate, after your 4 years, to see if your major's even going to be relevant, right? Just to get a job to pay off that loan. And mind you, I know, again, growing up, I wasn't really told, too much about the whole process of taking a loan, applying for scholarships. It's just get to college and then figure it out after, right? So with that being said, I'm here thinking, I'm going to get a 6-figure job right after college, not realizing, like, oh, no, wait, I have to start from the bottom. Right. So wait, how am I going to pay off, oh, wait, it was already paid off, my fault. But how are other people, how are they, expected to pay off those loans? Right. Even now, I know I have people that are in med school, getting in residency, are doctors in their first year, and they have years left to pay off the loans that they took for that.
It's crazy.
It's very discouraging. Disheartening,
Yeah, I recently watched the documentary. It's called Borrowed Future. I don't know if you guys watched it or heard about it, man. Mm-hmm. It's very good, man. It's about the student loan crisis in America, man.
Okay,
it's cool, crazy. Man. There was like a dentist. I don't even know how this guy, he racked up like $1 million in student loans.
It's student
$1 million, bro.
$1 million bucks?
I'm like, bro, $1 million.
Holy cow. Damn, bro. What are you giving that minimum payment?
I'm saying like that. He better be the best damn dentist in the world to pay that off, man.
He needs celebrity clients. Oh my Lord.
Like, for real, how much is your salary on $1 million loan? What do you anticipate your salary to be?
Yeah, I don't know how much a dentist makes, man, but
not $1 million bucks, I'll tell you that.
I want to know what lifestyle that dentist has too. Like,
no, but you know what? At the end of the documentary, it says something like that. Him and his wife, they've paid off about, and God bless his wife. Like, because if I saw somebody, I would never marry somebody that has that much.
$1 million.
I'm sorry.
Like, how much student loans you got? I don't know.
Oh my! All right, man. Nice knowing you. Like,
right? You be good with your $1 million handcuff. Be good with that.
Thank you for the dinner.
God bless his wife. Right? They had paid off like $400K out of the $1 million. So I'm like, all right, but.
How long did it take, though? That's my question.
They're saying like how much interest is still accumulating in that. You know what I'm saying?
Exactly.
So that's gonna be like to his grave,
bro.
Like, still owes $300,000.
That's gonna roll over to his kids.
Think about it.
You know what I'm saying?
If you invest in the market and you have $1 million, right, at 4%, you're getting $40K a year, right? That's the same thing. If your loan is 4%,
That's right. That's right. And it's not 4%.
you know it's more.
That joint's like 20%.
So it's like you're not even you're not getting anywhere, man. Like, so I'm saying
that's what I said before. Like you're hustling backwards, man. Like, what are you doing? You owe $1 million. What are you doing?
It makes no sense, man. So
I'd rather own $1 million worth of real estate than have $1 million in student loans. You know what I mean?
100%, man. So yeah, consumer debt. Don't do it, man. Credit cards. Don't do it. Car loans. Unfortunately, I have one. I owe about $13K on it, but once that's gone, no more.
But hey, bro, just like you just said, what was that? You know how to manage it, right? You identify it. Yeah. You identify how much this to the dollar, bro. That's
the only debt I have, bro. You see that? It's no credit. Obviously, like I said, no credit cards. The last credit card I paid it off was like in April, and that's it. They're like in the safe. I didn't cut them up, but I'm not going to use them because it is what it is. But
good, man. It's beautiful. Same deal here. Nice. No student loans, no car payments, just rental property.
Yeah. So once the loans and the rental property. We have a plan. Me and my wife we're trying to pay that off by December, hopefully before, and then that's it. After that, everything else is going to be cash money. The rest of our life, hopefully. You know what I'm saying? Obviously,
put this guy in the Dame Ridge.
Yeah, I know, right? You know what I'm saying? Better pay cash for everything, man.
You're about to hold one of those signs like, yo, I just paid off $14,000 of debt.
I'm debt free. So yeah, like another thing, cell phones, that's that too, man. So when you get on those plans, Verizon or AT&T, whatever company, don't even get on it because they grab you by the balls for 2-3 years.
That's true.
For $1,000, you know. So
while you pay off your $1,300 cell phone,
it makes no sense. So don't do that. Just like get your funds straight. You know, get your emergency fund, like they say, and then start investing.
You know what I think too, bro? I think going like with debt, I think this will probably be one of the last points we make here. I think that lifestyle creep is something that is not under control for people, bro.
Yeah, America, man.
So like, bro, I think that's what it is. Like we get a raise, like even if we get a bullshit 3% raise, right? Mm-hmm. Like people think, all right, I'm getting a raise, so I can do this now. I can do that now. I can do that now. Bro, my lifestyle, the money that I spend annually has not changed in like 5 or 6 years.
And they're not factoring in inflation.
I'm not joking.
That's why your net worth keeps going up, man. You know what I'm saying?
That's what I'm saying, bro. That's why I get to play this game every day because I got my shit under control.
Mm-hmm.
You know? So I think lifestyle creep is something that people gotta watch. Like bro, you gotta bullseye that and not let that control you.
Yeah. Don't be the flip.
Essentially.
Man. That was good.
All right.
Good debt talk, man.
Woo. All right, so that was our first topic, huh?
Yeah. That was the first topic. Great topic. You know, hope everyone loved that. You know, because that's something that we can all relate to. You know, so hope everyone loved that discussion.
We'll have a different topic every week.
Yes, sir. So, what are our keys to success? Right. I guess I'll go first. Number one, assess your lifestyle. Right. Do your financial budget. Identify everything that needs to be paid off, what your bills are. Yep. And then the third, don't go into debt. Don't be the flip. All right? What about you guys? What are your keys for success for tonight's episode?
I would probably say consistency is everything in this game, man. Honestly. I've realized that. I mean, we've only been in 4 years, both of us, but you know, I think consistency is absolutely essential to your growth, and you know, just to be a person about it every day. There's no wandering. There's no okay, I'm going to take today off. Like you got to be about this game every day, man. So I think as a general consensus of what we talked about today, talking about debt, talking about what we are, what we do, especially with our intros coming out, I think consistency in what you do and your dedication will drive what you become at the end. So pretty much what you think about comes about, and whatever you put your focus on is going to grow as your life grows. Boom.
Yeah.
Woo. Say the unit.
Yeah, man. Key also having kids. That's a bad debt too, man. I'm sorry. I gotta say it, man.
Keep it real, man. You gotta keep it real.
I love them, but That's $250K minimum, man. 18 years. I think I told you guys that before, man. A minimum a child costs you $250,000 in 18 years, man, and that's not even counting like college and all that other stuff.
Holy cow!
Come on, man. If you're gonna have kids, man, get ready because it's gonna be tougher. It's gonna be a lot tougher to be an investor and everything. Keep your money straight. But you make a good point, Flip. You always got to stay on top of your budget, man, because you only make so much money and you got to know where it's going. So, yeah, man. Good point with that.
All right.
Yes, sir.
So we just went over the keys for success, not just for next week, but this is for life, right? Now, just a quick summary of Nick and Nell's purchase for next week. Nick, you're going to be making purchases with PNNT, Caterpillar, and Target. Nelson, you're going to make purchases in Microsoft and JD, which is a Chinese company.
Yeah,
is there anything else that I missed?
JD to go down, Microsoft to go up if key levels are hit.
All right. So to end this show, disclaimer, we are not professionals. We are three gentlemen just trying to reach that financial freedom and create generational wealth, right? So I think I'm going to end with just make sure you make your risk management plan, make your assessment, and create strategies. But in addition, do your research. If you don't put the research, you don't put the time in, you don't budget that into your own schedule for the week, you're going to lose. Don't blow it. All right.
And I think just to close it out here, bro, I'm gonna say that the same thing that you said. We are not financial advisors. This is for entertainment purposes only. Please do your own research and consult a professional before you make any moves in the market. And just for disclaimers, anything that we talked about today: Dow, ticker symbol DOW; Cisco, ticker symbol CSCO; Altria, ticker symbol MO. I am all long these positions, and I own all of them.
Yes, sir. I don't own anything right now. I'm just trading. All right.
On the next episode of The Lifetimes of Flip, I'll go over more of my journey through debt and overcoming it.
Hey, listen, now they got to keep listening. They got to see when you finish paying off all that debt. You know what I'm saying?
It's like, did the Flip pay you off?
Yo, how much you owe, Flip? You're never going to find out, but.
Oh, I can't disclose that.
Exactly.
If you want me to continue hosting, my wife cannot know how much debt I'm in.
If you subscribe, Flip might disclose how much
if we get to a certain amount of followers or subscribers, he might put it out there, man.
I might have to leak some information. TMZ might, have to leak it. You know what I'm saying? But
we appreciate you guys. We're here trying to motivate, trying to inspire people to live this same financial freedom life that we're on as well. So we appreciate you guys coming on, listening, stopping by, watching, or whatever you're doing. Please do whatever you can to keep up with us. Flip, hit them with the social media deal.
All right. Follow us on Instagram at Eternal Money Podcast. For our YouTube, please subscribe, Eternal Money Podcast. And for our Twitter, please follow us at Eternal Money Pod. We'll see you next week. Love y'all. Be safe. Get that money.
Peace.
Peace.